The big annual gathering of global central bankers takes place this week. The most tantalizing question, will the Federal Reserve reveal when it will pull back from its massive purchases of bonds? And what will this do to stocks? Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. Each year in late August, central bank officials, as well as other financial figures around the world, meet in Jackson Hole, Wyoming, to discuss various monetary and economic issues. Thanks to the Delta variant, the confab is virtual this time. Investors are anxiously awaiting the speech by Federal Reserve Chairman Jerome Powell. What are Fed plans for cutting back its massive monthly purchases of Treasury bonds and mortgage-backed securities? Investors fear a sharp cutback will send up interest rates and whack stock prices. Back in 2013, the mere mention by the Fed that it would reduce a previous big bond buying program sent stocks into a swoon. The reaction was dubbed the taper tantrum. But here are the two major takeaways for investors. First, the tapering has already started, only it's being done surreptitiously. Second, future Fed monetary policy is more in the hands of Congress than Powell and his cohorts. Now, concerning tapering, every month the Fed has been buying $120 billion of government bonds and mortgages. Thanks to COVID-19 stimulus bills passed by Congress and money previously created by the Federal Reserve out of thin air, the financial system today is awash in liquidity. Corporations hold trillions in cash. Banks are loaded with lendable funds. Consumer checking accounts are at record levels. Given all this, the continuation of the scale of the Fed's bond buying should be fueling far worse inflation than what we've been experiencing. Our central bank has staved off a bigger crisis for now by employing a rarely used gimmick, what is technically called reverse repurchase agreements, reverse repos for short. In essence, the Fed is borrowing back the money it creates with its bond buying. It's like pouring a bucket of water in one end of a pool, then removing that water from the other end. In February, the amount the Fed held of these reverse repos was zero. Now it's over $1 trillion. How long can our central bank do this, considering that these devices are very short-term in duration, literally often overnight? This gets to the fact that the Fed will not be in control of its destiny if Congress passes President Biden's humongous spending bills. The central bank will face irresistible pressure to buy bonds to help finance this extravagance. Biden's tax increases will send the economy to a screeching halt, a slowdown that will sharply curtail government revenues, thereby necessitating Uncle Sam having to take on more debt to cover the shortfall. The fate of stocks is in the hands of Congress, which should give investors pause. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.